Our Kraken webinar, Defying Expectations, the Future of Ethereum. So I think everyone's here because we know a new trend is driving renewed interest in protocols and projects that are running on the Ethereum blockchain. After a years-long bear market, life has returned. There are gains. There's interest to be found. I guess the question for today that we're going to be exploring with your questions and my own is, as has happened before in crypto, are expectations outpacing what's happening in innovation? So quick introduction to myself and the panelists. Myself, I'm a longtime cryptocurrency journalist, currently editor-at-large at Kraken, where I lead content and special projects. Personally been playing around with some DeFi tokens and apps, and a little bit confused, excited, have some questions, I'm sure as everyone here. And just going around the horn for people who are not familiar with our guests, with us today is Andrew Keys, co-founder and of the famed Ethereum project incubator Consensus, currently managing partner at Dharma Capital, an investment management firm focused on digital assets. Welcome, Andrew. And then next we have William Mougayar, founder of Token Summit, a leading conference bringing together emerging crypto asset entrepreneurs, former advisor to the Ethereum Foundation. Welcome, William.
Hi, everybody.
We have Anthony Sassano, project marketing manager at Set Labs, a protocol built on Ethereum that allows for the creation of crypto asset management tools. And he's founder of ETH Hub, Ethereum Research and Resources Hub. Welcome, Anthony.
Hey, Pete. Thanks for having me.
Last but not least, Sean Adams, host of the Bankless podcast, an audio guide to crypto finance, and the founder of Mythos Capital, an investment company that holds and works in the crypto asset markets. Welcome, Ryan.
Great to be here. Thanks, Pete.
All right. So once again, taking questions via Zoom, YouTube. We'll be doing a few questions to kind of kick it off and then returning to Q&A. So, patiently waiting all your questions. Before we begin, quick reminder to do your own research, right? An important part of crypto investing. Any mention of specific projects in this webinar should not be viewed as an endorsement. So, all right, kicking off, I'd say from my experience in the industry, I joined in about 2013. I generally have developed somewhat of a distaste for buzzwords, right? I think we've seen in crypto a history of words and technology somewhat distorting what is happening on the ground. So I guess my question here to the panelists to begin, what is the definition of DeFi to you? And digging into that a little further, what phenomena and behaviors are occurring here and how are they new? Andrew, I'd like to kick that off to you. What really is happening here that's new?
Simply put, I think we're seeing the automation of financial instruments. So lending, borrowing, derivatives, and basically Ethereum empowers anyone to do that trustlessly and permissionlessly. So if I were to kind of succinctly put it, kind of the trustless automation of financial instruments.
Nice and succinct. Anthony, maybe turning that same question over to you. What are the behaviors here that you're seeing and what makes that something new?
Yeah. So I guess I would definitely echo what Andrew was saying. It's a really, really great explanation of what it is. I think for me, and what gets me most excited about it is the fact that it's just open, right? It's completely global. Everyone can get involved, no matter if you're, in the US or somewhere else. You can build new financial tools on this neutral infrastructure that is Ethereum, which leads itself to all the innovation that we're seeing. Because in the traditional finance system, it's a lot harder to build these sorts of things. You need all sorts of licenses. You need lots of capital. There's like a ton of regulation, for better or worse. So you can basically deploy anything you want to Ethereum and get people using it and grow it in in a week. You could have a protocol that has millions of dollars running through it on Ethereum, which I think is really, really cool.
So it sounds like what you're saying there, Anthony, is just what's new here is just the ease of access in the startup for these different practices. It's not so much the behavior that's new.
Well, I think it's both, really. But just, I guess, from my perspective, I look at it as if we're able to create all these new things because of the openness, right? We're able to kind of do all this, I guess you can call it money Legos or composability between all these different things because it's open. Whereas in the traditional system, it's very closed and people can't innovate like they can on Ethereum.
Mhm. William, maybe turning that question over to you. Is that what's new here to you? Is it the openness? I think we've seen open innovation in cryptocurrencies for a while. Is that the new piece for you?
Well, for me, DeFi is the latest big innovation category based on Ethereum. And it's targeting new financial products that are invented and executed on the blockchain itself. So that's the novelty. Now, in other words, as you know, I mean, we don't call sushi dead cold fish because it's not a very good description.
Wait,
It's
really?
sushi,
You don't?
and this is why we
I do.
call it DeFi, right? So in other words, DeFi by another name would be automated algorithmic financial products with no central human intermediaries and plenty of decentralized computer-based protocols and intermediaries. So that is kind of the dead cold fish analogy to DeFi. So it's really something that is new, and it's a nice name. But really, to put the context in place here, DeFi is really an extension of financial services. And you can think of today, we have old-fi, whatever is currently we know of, old-fi. And we have everything else is on the blockchain. And DeFi is the edge of blockchain types of financial services. And it builds on all the previous innovations that Ethereum brought us. Smart contracts, which is business logic. It builds on ICOs, which is the way of raising real money based on tokens, based on governance, the voting aspects, and all kinds of functionality with the tokens.
DeFi versus old fi. I love it. Ryan, what do you think about that? Does that jive with your definition of what you think DeFi is?
Yeah, I think it does. So the way I describe DeFi is basically in one word, and that's bankless. So we talk about DeFi, and we're talking about DeFi now, and I agree with all of these answers. They're absolutely correct. But we talk about DeFi as if it's a new thing. It's not. DeFi was created in 2009 with the original Bitcoin white paper. It was called a peer-to-peer cash system, right? A bankless cash system. So the ability to move a money, some sort of unit of digital scarcity, some sort of unit of value without a bank, without a central intermediary. So what is DeFi? I mean, DeFi is Bitcoin, but DeFi is now also Ethereum. So with Bitcoin, you had the ability to hold without a bank. You could custody your own assets. You could also transact with it. You could move Bitcoin from one individual to another in a peer-to-peer type way. Ethereum allows you to do other money verbs, let's call them, without a bank. So not only transacting, not only holding, but also lending without a bank, also borrowing without a bank, also trading without a bank. That's what DeFi protocols are. It's basically an extension of the original crypto vision of Bitcoin into all of these other money verbs. And a lot of that build out is happening on Ethereum today. So what is DeFi? It's doing things without a bank. It's bankless.
So I guess, Ryan, maybe we can make that a little bit more real for people here. Is there a specific crypto asset that you think is a really great example that's just doing really well by any definition you can think of, that's, really fulfilling what we're trying to aspire to here?
Yeah, I would say, Bitcoin was the first, right? So that is a digital store of value, a digital money, right? The challenge with Bitcoin is beyond transacting with it on the network, there's not a lot of other things you can do. So Ethereum and Ether is another store of value. So it's another reserve asset for a decentralized financial system. So it's also like Bitcoin in that it can be used to store value and to pay for transactions on the Ethereum network. But now there are other things you can do with Ethereum. So take Uniswap, for example. That is a completely bankless, no central intermediary, completely unstoppable, open, permissionless exchange system. It's called an automated market maker. It's grown since like 2019 to trade volumes in the hundreds of millions some days. And it's completely permissionless. So no one has to ask permission of the bank to list an asset. They just list the assets, very much like the internet. I don't have to ask permission to put a website on the internet. I can just do it. That's what permissionless open finance is. That's what DeFi is. And now there are all of these DeFi assets that are emerging around those money protocols. This is not like the ICOs of 2017 that didn't ship products and were completely vaporware. This is like a new thing because these money protocols actually have on-chain cash flows. So they're actually producing value. They actually have liquidity. The projects have shipped. And there's a whole slew of them that we could talk about. Aave, that's a lend protocol. There's Compound with Comp. Much to talk about there. But yeah, this is a really exciting time, I think, to be in crypto and to be in DeFi because we're seeing the emergence of all of these things and actually valuable capital assets that back some of them.
Yeah, I would say.
And I'd just like to add one quick point to Ryan's. Uniswap shipped with, I think, less than $100,000 grant without a token from the Ethereum Foundation, by the way.
One guy.
The simplicity of creating these types of applications on top of this global permissionless substrate that is Ethereum is unbelievable.
Interesting. Anthony, I guess maybe turning it over to you, is there a crypto asset that you feel like is really nailing the definition? Because it sounds like Uniswap in that case, it's not exactly an asset, it's a protocol. Maybe you can kind of talk about the differences there. So DeFi is both the protocols and the assets. Is there a good example of one or the other to you?
I think at the moment, we're seeing some really great assets be kind of like, I guess, not just created, but tweaked. So a lot of the tokens that have actually been around for quite a while, they've actually tweaked their kind of token economics, you can call it, so that it actually leads to direct value capture from the use of the protocol. So I guess yesterday, I think it was, we saw Aave. They released their new token economics for their Lend token. And that basically describes a bunch of different mechanics that they've built in for, I guess, like there's going to be kind of a staking mechanism. It's going to be able to accrue value through fees and things like that. But I think in terms of like something that's really nailed it, I don't know if we could say that just yet. I think we're still in the early phase of figuring out how to best kind of design these tokens. I think we're much further along than we were in 2017. As Ryan was saying, a lot of the tokens that launched in 2017 were, I think Ryan has said this on his podcast once, called futility tokens. And I think that's been around for a while, where they didn't actually do anything. They basically just existed to raise money during an ICO, make the founders rich, and then dwindle all the way to zero, like we've seen. Whereas these new DeFi tokens are anything but that. They actually do have real utility, and some people liken them to owning kind of stock in a company, right? Where you get like voting rights. Some of these tokens will give you governance rights. You get like a dividend, but we don't really call it that in DeFi because it's a little bit different. But that's what I am kind of seeing across the board right now. Different projects just, trying to find the best model that drives the most amount of fundamental value to the token.
Yeah, I guess maybe sticking with that point, I think the part where I've been struggling a little bit is like, what answers that new behavior question, right? So we've seen protocols raising money, we've seen protocols launching, we've seen them distributing tokens. The part that I guess is tripping me up a little bit is what is specifically happening now that wasn't happening before, and why is there something that is happening that is driving that interest?
If I may, I think what's happening now is that capital formation or capital creation is accessible to Main Street, where it typically was, in, let's say, token generation 2-3 years ago, was only accessible to, for what it is, primarily white men on Sand Hill Road. And lending was primarily accessible to institutions. Now we're essentially democratizing that process. And I think that when we look at the application layer, I think it's very good to remember how the internet, the failure rate of the internet, 85% of .coms went to zero from 1996 to 2006. And we should see a similar trajectory of the application layer on Ethereum. That said, the 1 in 1,000s are already permeating with things like Uniswap, with things like, Balancer in its early days. So I think what we're seeing is just the democratization of financial instruments, and to Ryan's verbiage, the verbs of finance.
William, maybe turning it over to you. So the verbs that we've got here, we've got lending, we've got market making, we've got, creation of stable coins and stable assets, decentralized exchange. Are those the big categories you see? What are the big categories that we're seeing emerge here?
Derivatives. I see the upcoming category that's going to be huge is derivatives. And again, today, the derivatives market is a multi-trillion market in the traditional sense. So imagine if gradually some small percentage of that would become available on the blockchain. And in terms of tokens, Synthetics comes to mind. They are one of the leaders in the derivatives space. Mm-hmm. But again, to put things in context, we are still in the very, very early days of DeFi. I mean, we keep bragging about the fact that we have 4 billion, or depending what time you're looking at your watch, or coin market cap, how much is being staked or kind of parked in crypto, and 4 billion out of a 300 and maybe 50 billion crypto market cap as a whole is still a small number. And not only that, but within that number, only a small number of crypto enthusiasts and crypto experts are able to participate in this segment. So what I'd like to see, and hopefully we'll talk about this a bit further down the line, is I would like to see DeFi become more mainstream. And today you could argue that DeFi is a niche. DeFi is a playground for the early crypto users. And the go forward is, how do we make DeFi become more mainstream?
Yield. I think in an interest rate starved environment, the interest rates that people can earn compared to what they would earn in a bond, a centrified bond, I think it's just behavioral economic incentives.
Yeah, I wanted to stick with a little bit of an example that maybe people are more familiar with, right? So I think we're talking about automating financial services. Lending is something people understand, right? You don't have money, you go to access a lender, and then they loan you money at some rate. How does that exactly translate into an opportunity for token holders now, right? I think that's something people are trying to make the leap from. Okay, I know how this service works today. How is this particularly an opportunity for me as a trader or investor? Maybe Ryan, that question over to you.
Yeah, so I think of the crypto world in like 3 asset super categories, and Chris Berninski talked about this. The first is a store of value money type asset. So Bitcoin would be one. Anthony and I think probably the entire panelists would argue Ether is one as well. ETH is money. These are valued based on their ability to be a money type system, a monetary system, a reserve asset. So that's category 1. And we've got category 2, which is commodities. So these are things in the real world, like oil, for example. In the crypto world, you might think of block space as being sort of a commodity. And then we have this third category of asset superclasses called capital assets. Again, we see all of these things in the real world. Capital assets are things like stocks, things like bonds, things that deliver a yield. You own a house, you can charge rent on that. That's a capital asset. These emerging tokens in DeFi, the money protocols that we're talking about, are in that third category. These are capital assets. So the super cool thing, if you're an investor and a trader, is you can start to value these things very coherently, based on the way you'd value other capital assets, which is very simple. They teach you this in business school. Net present value of future cash flows, really simple. Now these DeFi tokens are generating cash flows. These cash flows can be verified on chain. So when a protocol like Aave locks up some collateral and you lend against it, they essentially charge an algorithmic interest rate. That interest rate, a portion of it, can go to token holders, the holders of the Lend protocol. So how do you value something like Lend? Well, you look at it from a capital asset perspective and you say, how large can this pool of collateral get? What's the interest that they're going to charge? And then you do a discounted cash flow model. That's the opportunity, is to, like, one, understand these assets, what they actually are and what category they fit in. In 2017, we thought everything was like a that first category, like everything, these futility tokens, everything's going to be a money, everything's going to moon, everything's some like market cap portion of Bitcoin. That's crazy. That's not what these tokens were. They were failed capital assets, essentially. Now we have real capital assets, and there's an opportunity to get ahead of this, to value them, to look at what's emerging in DeFi, and to make your bets.
Interesting. So we have a kind of three-pronged way to look at it: store value, commodities, capital assets. Anyone want to offer a different, or anyone using a different framework to evaluate what's happening?
Well, I think the other big theme underlying all of this is that everything is programmable right now. And again, to put things in context, Bitcoin was the first cryptocurrency and Bitcoin was about programmable money, but the P in the programmable money was a small p and big on the M. And Ethereum came along and they flipped it. Vitalik realized, well, there's not enough programmability in this money called Bitcoin. We want to increase the P aspect. And for those that were in the early days of Ethereum, the money aspect of Ethereum was not a prevalent parameter. Andrew, you probably remember that. I remember I was making a list of the Ethereum ecosystem, and in it, I included a category called exchanges, because at the time we were counting how many exchanges started to list Ethereum. And Gavin Wood and Vitalik and others told me, no, we don't want, we're not about money. We don't want to count the exchanges as part of the ecosystem because that kind of is something separate. Since DeFi, what has happened now, the P and the M are at equal footing. Ethereum is the only and the biggest protocol that has able to put the money aspect and the programmability aspect at an equal footing. And that is really what's exciting.
Anthony, Andrew, alternative frameworks for looking at what's happening?
Well, I think they both explained it very well, William and Ryan. I really do like Ryan's framework of breaking it down into those three categories. I've seen him talk about that a lot, so it's something that I really gel with. But to William's point as well, like I mean, personally wasn't around in early Ethereum, but I do know from others recounts that ETH was not viewed as like a monetary asset or a kind of store of value asset. It was definitely viewed as kind of gas to pay, for network fees, right? And like digital oil, you could call it. Unlike Bitcoin, which seems from, at least the early days of 2010 was viewed as this kind of like potential digital gold, right? Store of value asset. Whereas over the last, I guess you could say maybe 2 years since the kind of ICO bubble burst, Ether as an asset has actually become a lot more prevalent in people's minds, and people realize that if we want this system to be as big as we want it to be as secure as we want it to be, we need the asset that backs it to be as valuable as it can be, right? That's looks like blockchains 101. But on top of that, William was talking about the programmability of this money. So the fact that ETH is extremely programmable in itself, it can be used as really, really great collateral within DeFi. And that's why we see, this ETH locked in DeFi kind of narrative that gets spread around, is that people are using their ETH in MakerDAO, taking out a kind of a loan against this protocol and generating a stable coin called DAI. And then they can go, lend that DAI on a protocol like Compound, right? For example, and they're doing this in a totally bankless way. There's no intermediaries here. They're doing this from their MetaMask wallet on a Chrome browser, which to me is quite amazing. So yeah, I think William put it really well with his programmability, programmable money kind of example there, that we've basically made the P and the M really big.
Mm-hmm. Interesting. I guess I want to stick with something that you mentioned there. So there's also, people are coming out with frameworks for these assets. These assets are emerging in real time. We're also trying to figure out how to, judge them or figure out how they're performing, right? So usually that leads us to the creation of new metrics, right? In the last bubble, we saw market capitalization kind of emerge as a big metric. It seems like there's a consensus forming now around total value locks. Does anybody have a way to explain that or contextualize that? Why does total value locked matter for a DeFi asset? Does it matter for certain DeFi assets? How did we get to this term, and what's the utility of it?
I can kind of answer that. So the term originally actually came from a website that came before DeFi Pulse that was just tracking how much ETH was locked in the protocols or how much ETH was deposited in these protocols. It wasn't really anything that was kind of like official from anyone in the community. No one said, this is the metric we're going to actually use to measure the growth of these protocols. It's just something that people rallied around. I think because of the fact that people see ETH being locked up and they're like, oh, okay, that ETH can't be sold now. That means less sell pressure. Maybe the price of ETH will go up. I think that's like the very primitive way to kind of look at it. Over the last few months, I think the metric has come under intense scrutiny because people are like, it doesn't really mean anything. The ETH is not actually quote unquote locked. It's kind of deposited or parked in these protocols. It's not like the people who own this ETH can't go there and withdraw it at any time, which you can, because these protocols are always online. It's not like a bank or anything. It's 24/7. You can withdraw whenever you want. So people are looking for better ways to measure the growth of DeFi now. And there's talk of something called on-chain cash flow. So how much kind of like money is running through these protocols, not locked, but just like liquidity running through these protocols, and especially ones where they charge fees. Because obviously if there's no fees involved with the protocol, people could just do lots of wash trading. And even with fees, wash trading can still happen. But, any metric that we try to assign is going to be imperfect due to just the way that the systems are designed. So that's how it kind of came to be. That's like a little bit of history about it. And, DeFi Pulse is an extremely popular website and they have it predominantly there. But I know that they're working on better ways to show the growth of these protocols because, USD or ETH locked in DeFi is probably a crude metric at this point.
So it sounds like we're getting away from that. Oh, sorry, William.
If I can add, I mean, the money that's deposited, the reason why we use that is because traditionally with banks, that's the metric with banks. The biggest metric for a bank is assets, which is two things. It's how much the consumers are depositing in these accounts, and the assets that the banks were able to generate as a result of using some of these deposits to grow these assets. So this is a traditional kind of way of thinking. But I agree with Anthony that it's not enough. What I'd like to see more of is the velocity of the money that's kind of inside of these markets, because this is all about a new economy here. And the cash flow kind of movement is maybe one to look at. I'm not sure who is doing a good job at measuring that. I have an issue with stable coins as well being measured by market cap because it really doesn't say anything. You have to see how much that money is moving, and that is called the velocity of money, for example.
And if I may just add to that, what I'm most interested in is the Gini coefficient. I want to see millions of people take out $100 loans rather than one person take out $1 million loan. And basically the quadratic nature of many people using it. So the usability. So I think that's an important metric for the growth of the ecosystem. So we don't have kind of wealth dispersions where you've got a 1%, 99% type economy again. So that's one thing that I think is probably the most important is the Gini coefficient.
Let me maybe ask that question a little bit a different way. So we're seeing a lot of projects come to the market and make big splashes, right? So how would you recommend like evaluating something, right? So if somebody here on this call, they're looking at their Twitter feed, they suddenly see a ton of things about Wi-Fi, right? Or Wi-Fi, however you pronounce it, right? So how are you looking at an asset that's coming to market and then evaluating that objectively? Is that something that we're doing and how is it being done?
So I'll take it first, but I'm sure Ryan and Anthony and William have probably better answers. I'm looking at it through the lens of the 1996 to 2006 .com bust. That first off, I say 85% of these companies or projects will go to zero, and I think that Ether is a commodity substrate that will fuel all of them. And I would say 85% of the time, right off the bat, you're probably better off just buying Ether. And with that said, then you've got to do the typical venture due diligence. Team, protocol, and basically what they're attempting to do is their product market fit, and go through just the basic market due diligence.
Anybody else want to take a stab at that answer?
I could say something on this. So yeah, I absolutely agree with Andrew. So the way I think about crypto is sort of there's three types of investing you can do in crypto. We'll all call it investing. The first is trading. Do a lot of that on Kraken, obviously, right? So this is, you're looking at charts, you're looking at short-term things. Everyone knows what trading is. The second is narrative investing. So that's a little bit of a longer time horizon generally. Like narratives in crypto can come and go. 3-month cycles, 6-month cycles, 9-month cycles. DeFi is in a narrative high right now. I don't think it's the all-time high, by the way, but I think it's creeping up. That's a narrative. We've seen other narratives in crypto, and we could list all of them. We remember them. That's another way you can front run things, is you get ahead of the narrative. And remember, a lot of these markets, well, I was just talking about fundamentals, and that's emerging. It's still so early that narrative investing still kind of rules the day in the short run. So think about that as your 3-month time horizon to your 18-month time horizon. And the third, and I think personally the one I'm most aligned with, is the fundamental investing, where you are buying and holding for the long run. And there, Andrew is absolutely spot on, right? So you want the reserve assets at the bottom that aren't going anywhere, right? Those are things, to me, these are the monetary assets. These are things like Ether and Bitcoin, for example. Once you have that, then it depends on your proclivities. Do you want to be a trader? You can go do that. You could generate some alpha there. Do you want to do narrative investing? Well, that's a different skill set. You mentioned wifey. It's a token called YFI, right? So this is an absolutely insane DeFi token. Came out like, I think 3 weeks ago. Went from $3, okay, listed on Uniswap, to over 3,000. So that's a 1,000% gain. It did that in a week. Okay. Narrative, definitely. DeFi's hot. It had a founder that was almost Satoshi-like. There was no pre-sale, no venture capitalists involved. It was all 100% community and provided to the community by liquidity mining. That means users actually had to start using the YFI protocol in order to earn it. So completely different distribution, right? It had the narrative, it had the meme, but it also had some fundamentals. So this token grew in terms of total locked value. And William mentioned this is like the bank's value, it, assets under management, essentially, to something like 200 million, 300 million, right? And if you compare that relative valuation of how much that money protocol had locked to others, like a comp or a lend, you saw an arbitrage. Like there was a mismatch, especially in the early days. And everyone, I think, who was in DeFi and saw and was using DeFi protocols saw YFI as an immediate opportunity because it was mispriced by the market. Now, I don't know if it's still mispriced. It's gone up a lot since the early days, but that's an example of how, like, a framework you use, those three different sort of core pieces. But the last thing I'd say on this is, in order to find these types of opportunities, you have to be there. You have to be at the table. You have to start using these DeFi protocols. Yeah, it's tough. You have to set up a MetaMask account. You have to do things. It's a little clunky. It's like using the internet in 1993. It's a little clunky. The dial-up modem in the background. But only the people who knew about DeFi protocols, as a niche within a niche, were able to see an opportunity like YFI. So my big encouragement would be to everyone watching this, go start using some DeFi protocols.
Interesting. Anybody else want to build off that? I guess, is there tips that you would give to people? I mean, are you guys actually downloading and running nodes on all, 50, 60 of these, assets, like new assets and protocols?
You don't have to run a node. I absolutely have a compound loan via Instadap. And I think, we're in early days. We're in 1996, AOL clunky, things are not smooth. It takes a little longer. Transactions are a little expensive, but user experience is definitely improving, and it's unbelievable. Take out a $100 loan on $300 of collateral. I completely agree with Ryan. It's amazing.
The only caveat I'd say, just before everyone goes crazy, is, as Andrew said, start real small. Okay, this is the Wild West. You could lose everything. These smart contracts could be hacked and you could lose it all. Start with that mindset, but do it to learn, not necessarily to generate like a return,
Totally.
but just as a learning exercise so you're ready.
Yeah, I guess I want to talk about the learning exercise. So one of the things I think people are going to be looking at a lot is, should they buy some of these new assets and then should they put them in pools? Should they help, because that's where the yield farming that I guess that is happening right now. So is that a new behavior? How do you look at that behavior? Do people have the right expectations for that? Curious what you think about that, because essentially what it seems like we're asking people to, purchase these new assets and then just sort of, put them in a pool of other assets essentially. And I guess it's hard to figure out what the benefit of that is.
I think it depends upon people's risk and return profile is. I vehemently believe that there will be trillions of dollars locked or officiated, however you want to say, on Ethereum. And I do believe that Ethereum will have $1 trillion market cap. So that is obviously a multiple of where it is right now. And so I think that there's an opportunity cost of getting yield rather than just holding something like Ether.
I guess, but why do we want people like putting their money in these pools? Like what's the function of that behavior that we're asking right now?
Liquidity. Capital formation needs liquidity. So, rather than us going to Bank of America, we are borrowing from each other. And if this grows enough, there will be liquidity pools, just like there are insurance and reinsurance pools.
So I guess is it, Anthony, maybe turning over to you, is that the best way you get involved? Would you advise people kind of go out and try to take a small test at one of these?
Yeah, I mean, doing a small test these days might be a little bit hard because the fees are pretty high on Ethereum, unfortunately. People will discover that quite quickly. But in general, yes, I think that these things like the YFI token, this is basically like really deep and really risky DeFi. You hear a lot about it because everyone loves to talk about it because, they like to make memes. They like to talk about how much money they're making or they say they're making, but in reality, maybe they're not making that much money. But that's I think over the short term, it's kind of like a really big distraction for a lot of people. I think the long-term value creation here is what people should be focusing on. Things like literally putting some stable coins into compounds and earning a yield on that. That's a simple thing you can do in DeFi that anyone can do. There are apps out there that make that really easy already. Something like Dharma. It's like a mobile wallet app you can download and then earn a kind of yield on some stable coins. Argent also is another mobile wallet app that lets you do this as well. So those are like the front door of DeFi, those sorts of things. And that's the thing that I would tell people to kind of experiment with. I wouldn't suggest people try to experiment with stuff like the YFI token because that is definitely the more advanced stuff, and people will probably just end up getting confused. I guess it's kind of like, putting money in compound is like going on Facebook, right? Setting up a Facebook account, and then doing the YFI tokens like coding up a Facebook, website, right? There's just like such a big knowledge gap between the two activities and skill gap, I guess I should say, that I think people need to set their expectations a little bit lower there.
Mm-hmm. I guess before we get totally off the definition train of thought here, so one part of DeFi is the D, right? The decentralization. And there's been a lot of critiques over the years about decentralization theater. What is decentralization? Certainly Bitcoin has settled on a very specific definition of that. And I think, certain people, especially, some of our Kraken influencers have been really good about pushing, the sort of narrative that, you as a somebody uses Bitcoin, you need to run a node, right? You need to sort of have the ability to check and balance the system. And without that, maybe we don't have as much decentralization as we want. So how do you guys look at what DeFi is trying to achieve? I know, Andrew, you said earlier that, you don't have to run a node for these protocols to be decentralized. I guess, how are we looking at the decentralized piece of this, right? How much decentralization is enough? Do we know? Are we thinking about the messaging behind this?
I think if we talk about the network itself, So running a node was going to obviously decentralize the network, right? And lead to further decentralization of the Ethereum network itself. And anyone can kind of run an Ethereum full node on their home PC if they want to today. It's more intensive than running a Bitcoin node, of course, but people can still do it. It's not something that's out of reach. If we talk about the decentralization of the protocols themselves, this is, the protocols do come up under criticism because a lot of them still have what's called admin keys, which means that there are central operators of these protocols, usually the team, or pretty much always the team, right, that has kind of developed this protocol. And that admin key is in place because the protocol is not finished, right? It's still being developed. There's still being features added. It's not safe to just kind of like, I guess, burn that admin key and just let it run without any kind of like changes or upgrades. Then you have the protocols that have token holder governance, like MakerDAO, where the MKR token holders actually set the parameters of the system. So they'll vote on different things like the stability fee or the debt ceiling, which is how much kind of like DAI can be generated from the system. Compound has a similar model. Pretty much like all of the DeFi protocols are moving towards this token governance mechanism. But as it stands today in terms of decentralization, a lot of them are unfortunately still, I guess you could call them quote unquote centralized, because the admin keys can be used to maybe, in some cases freeze the assets in the protocol, or, in some cases if the admin key was accessed by someone maliciously, they could drain the asset. So, those are the things that are definitely not on the surface when you look into DeFi. And I think that the term DeFi, yes, it says decentralized finance, but I think that it just took off because it's a really catchy term. I think that if you take it too seriously, you're going to, obviously have criticisms of it. But I think it's just a catch-all term. It doesn't really to me, I just think DeFi. I don't even think decentralized finance anymore. DeFi just means to me like on Ethereum financial products kind of thing.
See a lot of people going on mute and unmuting and then muting themselves. Anyone else want to take a stab at that question, Andrew?
Yeah. Sorry.
Go for it, William.
If I wanted to add to what Anthony was saying, the way to look at decentralization is that it has many layers. And there's a technical way of decentralizing things, and there's a non-technical way. And we figured out already the technical aspects of decentralization. It's called Ethereum or any blockchain. That is kind of the base layer. And what is going on right now is decentralization is going up, moving up into more business decision-making, which is, we call it governance in the DeFi circles. And in the first step, you hear about voting. So these DeFi protocols, they put forth a specific proposal for a particular way of operating the funds or a particular way of having this kind of algorithm. And the token holders in a first step vote on whether they like the approach or not. So this is one way of defining decentralization. Another more advanced way, to kind of pick up on what Anthony said, there are more advanced places to participate. Not only they allow you to vote, they allow you to even invent and create these algorithms. So Wi-Fi is an extreme case where the creator said, well, I don't know exactly how we should operate it. What do you think? And let's kind of come up with a new way to govern this new operation. And it can go from there. But again, it can get complicated. So now imagine you have not just one person dreaming up these products, but you have a number of people together, coming together and governing the direction of how these financial instruments should be going towards.
Andrew, did you want to add there?
What I think both Anthony and William said this very succinctly, but I'll go back to the notion of Gini coefficient. We need to decentralize the user base. The more users, and it can be small amounts of money, the better. These are applications that start out on a spectrum of centralization to decentralization, and we're in a period of time. This is the first out of the first inning still. Over the next 10 years, as this technology evolves, there will be much more decentralization. I not to be the old man, Microsoft Office, which I think is a great example of legacy software, really took 12 years to be built. And we're in, year 5, and year 0, 1, and 2, there were no developer tools. So people couldn't even, we had to build that first. So I really think we're in year 2 or 3. So it's just very, very, very early days.
Interesting. I guess switching up, I do want to address, I think this has come up a few times and also, gets to the sort of the theme of the webinar, which is, all of this innovation, these new protocols, these new assets are happening on top of Ethereum. And I think people are also curious to what extent, trading, investing, or thinking about Ethereum, how does the value that is accruing in DeFi lead to value that accrues in Ethereum? I guess I'm curious to hear from you guys. How do we think about this relationship? Are we seeing the value in DeFi getting captured in Ethereum? Open question.
I can start with that, Pete, if you want.
Yeah, sure. Go for it.
So I think that very much Ether is the reserve asset for DeFi right now. So it's a unique asset. There are ways to port other assets into Ethereum, of course. So we have stable coins. Those can be issued by banks. We have Bitcoin that can be tokenized and issued on Ethereum. But none of them have the zero trust properties of Ether as an asset, which basically means every other asset on Ethereum, you're depending on some other trusted third party. So if you have USDC, you're depending on Coinbase. If you have a tokenized Bitcoin, you're depending on whatever custody agent or whatever protocol or whatever Oracle system released that on Ethereum. Ether is different. I call this trustless economic bandwidth, okay? We need a store of value, a trustless store of value asset in DeFi. And when I say DeFi, I'm talking Bitcoin, I'm talking all of crypto. Like that's DeFi, all of crypto is DeFi. We need a trustless store of value asset or multiple trustless store of value assets to build on top of in order to have trustless protocols on top. So take the example DAI. People might be familiar with it. It's a stable coin that basically is collateralized by a bunch of underlying assets, right? So you can always verify the value that's backing $1 of DAI. The only trustless economic bandwidth it has in all of its multiple collateral sources is Ether, right? Like that's the only completely trustless store of value on the Ethereum network. So like Ether can't be taken by, it's a non-sovereign store of value. It can't be taken by a third party, a government, a Coinbase. It's the most credibly neutral money on Ethereum. So that fact alone gives Ether a lot of upside, right? But that's just one pillar. I think of Ether as a triple point asset. It has 3 pillars. It's kind of like, your science class days where you have, a liquid, a solid, and a gas. There are three points there. And they can all be converted into one of those different materials. Ether is like that. So it can be used as a money, as a store of value, as collateral for this, trustless economy. That's one way. It can also be used as a commodity, as a gas, like as a fee to pay for gas. So as more transactions occur on Ethereum, then Ether is going to be needed to pay for that commodity cost. And then with ETH2, which is coming up, it will turn into a capital asset as well, right? That means when you stake Ether, you actually start getting a return on Ether. It becomes a productive asset. And the returns will vary between 3% at the low end to 20% at the high end. It's a triple point asset. It's a capital asset, it's a commodity, and it's a store of value money like Bitcoin. I don't think we've seen that in crypto before. I'm not sure if we've seen that anywhere before. And I do think that over the long run, even over the medium term, that the price of ETH will correlate to the success of DeFi in crypto.
Interesting. Any alternate takes there?
I would completely agree, and I was hoping Ryan was going to explain his triple asset thesis because I love it. And I would just also say that there's a very important Ethereum improvement proposal called EIP 1599 that starts essentially burning the assets. I sometimes I think of Ethereum as basically a energy creation mechanism. And basically, if you have like a power plant that's fueled by water, the water isn't necessarily valuable, and that's not necessarily a scarce commodity. But if it's fueled by oil, that is a scarce commodity. And I think we're kind of evolving from kind of this hydro power plant to an oil-based power plant, and this will just increase that kind of scarcity that will, I think, also add value to the network.
Yeah, I think it goes back to maybe what you were saying earlier, William, with the, Ethereum started out as a big P, little m. And it seems like there's been a renewed emphasis on the M part, the money part of Ethereum. So I guess, how do you see that, William? Or should we expect that DeFi is going to drive value into Ether as an asset?
Well, the reality is that today, most, if not all of the innovation is taking place on Ethereum because the barrier to getting in is so low on Ethereum, as Andrew was saying earlier. It doesn't take much to learn. It doesn't take much to get in, to start something on Ethereum. It is very easy. That has created the ability of a lot of innovation coming into it. And the other blockchains, I'm always asked, like, how about the other blockchains? I mean, there are some of them that are following what Ethereum is doing, and there's nothing wrong with that. But the Ethereum seems to be taking the largest share today of the innovation pie. And it's really about having a lot of the pieces below it. That's kind of important. So the analogy is WordPress. If you're looking to do something on WordPress, there's probably a plugin that can do it, or maybe 15 plugins that can do it. There's no shortage of choices, and Ethereum is becoming that. If you want to do something, you want a DeFi coin, go to it. There's like probably 15 dashboards that now track the DeFi coins. There's different ways of doing it. There's so much variety. You go to some of the other aspiring blockchains, maybe they have one or two examples and are trying to emulate, okay, well, now we have a stable coin on this blockchain. Wow, big deal. Well, Ethereum has dozens and dozens. They started the whole thing.
I guess I would, just to push back on that for a second. So, the idea that Ethereum benefits from having like the innovation pie, right? That Ether, the asset. I think maybe you can look at Bitcoin and say that, I think everybody would agree here that, quote, innovation as we're defining it on Ethereum in terms of new protocols, new assets being created, that's not happening on Bitcoin, yet we're seeing Bitcoin compete very well as a money. So I guess, how do we look at the performance of Ether through that lens? It's definitely taking a different approach.
So Ethereum is the next generation of the internet, full stop. Bitcoin is a singular use case. I can send you value. Ethereum is a decentralized, peer-to-peer world where anyone can build anything they want. And what's really driven the innovation, in my opinion, is standards. Early internet days, Java became the most popular language when it became J2EE, Java 2 Enterprise Edition, because it had clean web APIs and clean database APIs. So if you were a programmer in Mumbai, San Francisco, New York, or Paris, you had the same thing. What we've seen is the technical standards being created around token, around identity, around exchange, around reputation, and the proliferation of those open source standards, I think, are the most important. That's why you see 1,000 tokens and 99% of them should go to zero, but you have the ability to create those things. And we will hit escape velocity. I mean, I'd argue that Ethereum already has hit escape velocity, and there could be other blockchains and there could be other use cases and there will be other trade-offs. But I mean, Ethereum is here to stay and will continue to grow tremendously. But when the virtual machine of Ethereum evolves into WebAssembly, So basically, any engineer doesn't have to learn kind of a Solidity, which is kind of a JavaScript derivative. It will be unbelievable because basically you open up Ethereum to basically all legacy engineers that use WebAssembly.
I'll throw it over to the Ethos Money background guy to talk about that. So, I guess the question here is, if we think about the innovation pie, there are certain assets, I would say probably Bitcoin being the most prominent, that's, doing very well as a money. How does Ethereum kind of compete in that context?
Yeah. So I think if I can take it back to what Ryan was talking about, I agree with everything that everyone else said, but Ryan specifically was talking about that triple point asset. And I wanted to contextualize this for people. So ETH being used as kind of like this trustless collateral within DeFi, right? It's being used right now to do that. 4.2 million ETH is being used for that right now, which is about 3.5% of the total ETH supply, or $1.4 billion. So there's $1.4 billion worth of ETH, not locked in these protocols, I guess, but like parked there, right? In these protocols being used as a kind of trustless collateral, or being used in like a Uniswap to provide liquidity, things like that, right? And then the second point he was talking about was ETH being used to pay fees. Now, for the last almost 2 months, Ethereum fees have actually been higher than Bitcoin fees. So there's actually more demand for Ethereum's block space than there is for Bitcoin's block space in dollar terms, if we're looking at it through that lens. And Andrew touched on the EIP 1559, which is this new proposal to basically burn some portion of these fees every time like a transaction is sent on the network. So ETH becomes basically, ETH gets burnt with kind of like every transaction if this proposal goes through, which, there's a high chance it will, given how much support there is behind this. And then the last thing Ryan was talking about was obviously the staking in ETH too. And he explained that quite well. So those three properties are what make me the most bullish on ETH as an asset. So if you believe that DeFi is going to keep growing, and you believe people are going to want to use a trustless collateral that no one can kind of take away from them, that has basically, censorship resistant, all that good stuff, then you believe that people will keep buying ETH to do that, right? And if you believe that the Ethereum network in terms of like usage is going to keep growing, then people are going to have to buy ETH to pay for fees, right? And then one day those fees will be burned as well. And then also, if you think that people are going to want to stake their ETH to, earn a return on their ETH in ETH2, then they're going to have to buy that as well. So there's all this kind of demand that's here already, but there's just so much more to come for ETH as an asset outside of like the pure speculation, right? Of ETH going to a ridiculous price like it did in 2017 on the back of mostly speculation. There's these real fundamental drivers, and that's kind of like, I think, what separates it from Bitcoin, where Bitcoin has its, as Andrew said, it's like singular kind of use case and narrative that it sticks to, that is actually, there's quite a huge market for that, right? Even if it only captures gold's market cap of $7 trillion, that's still a massive market there. So, we could argue all day about how Bitcoin's valued. Obviously, I haven't got time for that, but that's how I kind of view ETH as the asset.
Anyone want to add any thoughts there?
I just think ETH is undervalued right now relative to other things, relative to just about any asset out there. And I'm in self-imposed Twitter jail. I can't tweet again until ETH hits 353. So help me out here, guys.
The Twitter jail. So I think something we touched on, this has come up in a few of the audience questions. Obviously, it's pretty public that Ethereum is, still evolving its technology roadmap, right? So there's going to be some changes upcoming, dates TBD, where we're going to go on this transition from Ethereum as we know it today to Ethereum 2.0, which will reimagine the network as a proof of stake network. How do the panelists here, I'm curious, see that transition? Could that impede progress on what's happening with DeFi? Do we get to situations where if there are problems, issues, delays, what have you with this migration, that some of this progress and momentum is put at risk?
Just at the high level, I'm not going to go into the technical aspects. As far as I know, it's not going to happen overnight. Some people think, well, one day we're going to have F 2.0, and tomorrow, if that day is tomorrow, everything will be solved. The way I see it is going to be a gradual progression towards a a number of features that ETH 2.0 will have. The first one being fundamental change in the proof of, which is going to be the proof of stake instead of proof of work. But ETH 1.0 is going to remain as it is, and ETH 2.0 is going to drag it with it. So everything that's already been built on 1.0 is going to be backward compatible with 2.0 as it progresses and as it gives us more capabilities. So think of it as a gradual evolution. The core developers and whoever is involved there are not foolish enough to kind of throw everything we've done so far and then go into this unknown. It is not that much unknown what we're going into. There's been a lot of testing. There will be more testing, and it's going to be gradually released. So we're going to see it gradually go into ETH 2.0.
Well, it is true that it is somewhat of a novel shift, right? We haven't seen anything, certainly of this magnitude before, where there's this much money involved in this transition.
I think, yeah, to that point, so ETH2 is being developed in parallel with ETH1, right? It's going to be a new blockchain when it launches. So the current roadmap, without getting into the technicals either, is basically, it's slated for later this year, is phase 0 of the roadmap. So phase 0 introduces proof of stake, and this will purely be a proof of stake, new proof of stake blockchain that just lets you stake your ETH and earn a return on it. There is no smart contracts. There's none of that stuff. There's not even balance transfers or anything like that. Then phase 1 gets introduced a little bit later, and that introduces what's called sharding, which is the main scalability improvement that ETH2 is going with. Then there's phase 1.5, which is probably, I would say, like the riskiest phase and the one with the most at stake, because that's when ETH1 gets merged into ETH2. So what would happen is the ETH1 chain as it exists today would kind of get, like, I guess, cloned onto ETH2, right, and become a shard on ETH2. So it would exist as shard 0, from my understanding, on ETH2, and it would just continue operating as it would normally as ETH1, but there would be no proof of work. It would be proof of stake now. So that's when kind of we kill proof of work for good on Ethereum. Obviously, someone can, a bunch of miners could fork that ETH1 chain that we just copied over and continue it on if they would like to, right? But all of the economic activities is expected to shift over to that ETH2 one there. And then phase 2 comes after that, which actually introduces full functionality for ETH2 in that the rest of the shards will be able to do smart contracts and talk to each other as well. So there's kind of a multi-year roadmap for the ETH2 rollout. And the only time that ETH1 gets involved is during phase 1.5 in that transition. Otherwise, at this point, there are kind of work being done on ETH1 to make it ready for that transition, but they're not being done in parallel. So there's no real risk of ETH2 work impeding on ETH1's growth at this point in time.
But there would be potentially situations where, as you're saying, maybe around the 1.5 phase where it might get into question, or there might be some risk of delay. Is that what you're saying?
So there could be a risk that the merger goes poorly, but then if it does, everyone will just continue on the ETH1 chain as normal, right? Mm-hmm. So unless the merger is actually successful, no one's going to kind of change, right? So the biggest risk is really that it just keeps getting delayed because it takes a long time to do these things, and it potentially takes many more years than we kind of anticipated. And maybe one of the competitors is able to get some market share in that environment.
Right. Interesting. Anyone have any other thoughts on that, and how that migration might look and impact everything that's going on?
One of your core questions, Pete, was like, if ETH2 gets delayed again, will that have an impact on the price of Ether? And I think the answer to that question is yes, it will. So my own kind of personal experience, in 2017, I felt like ETH2 was right around the corner, some element of ETH2, right? I had not done a deep dive of it. And in 2018, I realized my folly. And I did a deeper dive and looked at this stuff, and it was like, oh my God, this is not coming soon, right? And we had some setbacks and some delays. 2019 was sort of the building year. Now here we are in 2020. And I think the market is expecting more delays. Like we talked about narrative, the market narrative is ETH2 is never going to ship. I will tell you from my perspective, I've never been more certain that it will, right? So like we have test nets, we have real teams. I think everyone on this call talks to those teams about the, the development. It is a real network at this point. It's not like 2017, but I don't think the market realizes that. Now, that said, it'll happen in phases, as Anthony says. The first big phase, I think, is a super interesting one because it's the launch of proof of stake. This is essentially like an ETH bond market that you're opening up, turning ETH into a productive asset. And as Anthony was saying, that risk is also segmented to ETH2. But this will take time to, like the scalability benefits of ETH2 will take time, right? And I think everyone should be realistic about that. Like what I'm worried about is people see ETH2 and they're like, why hasn't ETH instantly scaled, 64x? It's not going to happen like that, not in phase one. But what we do have on the horizon in Ethereum is the advent of all of these really interesting layer 2 solutions. So if you're familiar in kind of the Bitcoin world, one layer 2 that's talked about often is Lightning. Ethereum has multiple flavors of layer 2, one of which is incredibly exciting. There are full exchanges on layer 2, exchanges like Loopring, exchanges like Diversify, that provide the central exchange capability, but essentially are doing it in a trustless layer 2. So this layer 2 tech, I think, is going to hit a golden age, hopefully, or an early golden age over the next 6 months. And I think that will stem some of the tide of these high gas fees, or at least provide some other outlets for Ethereum transactions in a secure way.
I guess my question was a little bit more granular, right? So you have the rise of these protocols that are essentially, DeFi projects that, potentially are leaderless, right? And then now we're sort of asking these protocols to like make a transition between, to actually, migrate their technology over to something new. And so, I think my question was a little bit more like smaller into how do we actually expect DeFi projects to make that transition, especially if there's, potentially even, a group of people or a large network of people making such a decision.
So there's this concept of a social contract that Hasu actually wrote about. He's a really great guy on Twitter, talks a lot about Bitcoin and Ethereum. He wrote about this concept of a social contract that basically states that a community behind, I guess, like, Bitcoin or Ethereum kind of has a mutual understanding of what the system is. Now, with Ethereum, from basically since it was kind of talked about originally by Vitalik, he spoke about doing proof of stake and doing sharding, right? There wasn't a concept of like, I guess, ETH2 back then. It was basically just, this is what we want Ethereum to be, but we're going to launch it as a proof of work network until we can actually do all the research and development to get it to this point. So I think all of the projects or most of the teams building the projects on Ethereum 1 today are aware of this transition, and they've kind of like implicitly bought into it by building on Ethereum, right? They've kind of said, okay, we're going to build on Ethereum with the awareness that this change will happen. This is a risk we're willing to take, and we're in for kind of the ride here. Not every kind of team would have done that. Some might not be aware of the intricacies of it. Some might just be building on ETH1 because that's where they can build their business right now, and kind of like make some money there or whatever. But in general, I think that the whole Ethereum ecosystem talks about ETH2 all the time. So if you're not bought into the ETH2 transition, then you shouldn't be building on Ethereum, right? If you're expecting the ETH2 transition not to happen, then Ethereum is not the chain that you should build on, and that's just the hard reality today.
One thing I just really quickly add to what Anthony is saying is actually in a phase, Ethereum 1.5, so somewhere in the phases between 0 and 2, the full Ethereum main chain actually gets ported over and merged. So there's actually, in the early stages, there's a choice whether to move, but eventually it all merges anyway. So all the projects that were still lingering for some reason, economic reason, social reason, whatever, will eventually get ported anyway.
Let me maybe ask this question a different way. I think we've heard a lot about competition for the smart contracting layer within the context of Ethereum, right? We've seen and we'll see a bunch of more protocols coming to market this year, sort of touting themselves as better base layers. Can Ethereum lose that race, in your opinion? Open question.
I think it could lose market share, but it will always from being used 100% to maybe 90% because there are different base layers that have different trade-offs. But it will still be the largest substrate in blockchain.
Yeah, I mean, as a percentage of the market as a whole, perhaps it might lose a little bit on a percentage basis, but the market as a whole is going to continue to grow. So on an absolute basis, I think Ethereum's footprint is going to remain very large. What you want to look at, and we've been talking about this for a long time, is the whole community behind Ethereum, the developers, the grassroots, the supporters. That is really the key aspect. That is the value of Ethereum. And depending who you ask, some people peg that at 300,000 plus at this point, and it is an orders of magnitude over the next one. And the switching costs for these developers is not that easy. There is a lot of commitment, as Anthony said. Social contract is understood philosophically, technically. There's a lot of support behind Ethereum, and that's something to not underestimate.
And to add to William's point, there's already a flourishing economy. You can use one Lego block of borrowing from this gigantic capital pool that's already sitting there. So it's like being in a city versus being in a rural area. You can have all sorts of access to goods in the city. You have to build your own world if you're in the middle of Wyoming.
Not only that, but there are many options. I mean, we're still in the tinkering stage. We are still in the iteration stage. And what Ethereum has and what Ethereum can afford is to have a lot of tries at many different things. And other blockchains cannot afford to have multiple tries and fail. They always have to nail it, more or less. Ethereum is a playground for a lot of trials and errors. And yes, not all of the tokens are perfect. Not all of the solutions are perfect. Some of them, nothing happens. But out of those, some good things happen, because if you look at the history of investment strategies, you have to invest into a lot of different things before you see the right ones emerge. There's no two ways about it. Nobody's going to nail something from day one.
You're talking about the chicken tender token that came out, right?
Oh, sorry. No, I was just going to say, it might be some people might say it's too early to call a winner in this race, but the way I view it is basically that while all these competitors are trying to catch Ethereum's just running away even more, right? It's not like Ethereum is sitting still and saying, come get me. It's saying, come chase me, right? And not only are they competing with ETH1, they're also competing with ETH2, right? ETH1, like on a technical basis, yeah, maybe depending on your definition, it may be inferior to these other solutions, right? But Bitcoin is inferior to all of them and it's still number one, right? So clearly the market does not value these things in terms of a technical thing. Clearly the market does not value these things like that. And to take a practical example, EOS reportedly raised $4 billion to build an Ethereum competitor. No one talks about EOS today, right? It's not even in the conversation of Ethereum competitors. There's a whole new crop of them now that are basically all fighting amongst each other to try and challenge Ethereum. So until I see an actual challenger for Ethereum that doesn't just have marketing hype behind it and a bunch of people who bought the token and want it to go up, then I'll consider Ethereum actually losing kind of like to one of these things. But I haven't seen anything like that yet.
I've been saying this since 17 and even before 15, because I've been studying the ecosystem. The biggest feature about Ethereum is not a feature. It's ecosystem. So as Anthony was saying, yeah, some odd blockchain could say, well, we do this better, or we do this faster, or we do this in a different way. It's not about that anymore. It's about the whole. And right now, Ethereum is the leader. And as a leader, all that Ethereum has to do is defend itself. Everybody wants to attack Ethereum. If you're number 2, you attack. If you're number 3, you attack. And all of them have to try harder. Avis is a number 2 in rental. They have to try harder. That's their motto, right? Everybody has to try harder to catch Ethereum. Ethereum, all they have to do is to defend themselves and keep moving.
Awesome. Well, we got only a few minutes left here. We still got 800 people on the webinar, so I'd like to thank all the Kraken faithful who stuck it through. So I want to end on some more forward-looking questions. I think we've kind of kicked the tires on the Ethereum theory, at least from my questions. So maybe let's get bullish predictions. What's the best case scenario for Ethereum this year, or maybe into next year? Let's say DeFi. We got that narrative momentum going. What does the landscape look like? How does it change? Maybe Andrew, kick us off.
What I'd say, maybe not this year, but I'll give you 5 years from now, Ether's over 10,000. Full stop.
Got some thumbs up from Anthony over there.
Full stop.
Yeah, I agree with that. That's my long-term price prediction as well. In terms of like predictions for end of year, I made a bunch of them at the start of the year. I said DEX volume would get to $1 billion a day. It's at like $400 million a day now. So almost, I guess, getting there. I said layer 2 technology would mature. It has. I didn't make a prediction on ETH's price because it's very hard to predict that over such a short time period. But if I had to put a number on it, I think ETH could be maybe $800 by end of the year.
If proof of stake ships, it'll be over 1,000.
Yeah, I think the interesting thing as a investor or trader, I mean, you do have to make decisions, right? Or am I going to put my money in Tesla or Bitcoin or Ethereum, right? So you're not competing in a vacuum either.
Well, I'm not going to give you a price prediction because that's an outcome of something else. The prediction I'm going to be talking about is the fact that I'd like to see more traditional support for Ethereum. And when that comes in, traditional markets, everybody has to come to the Ethereum bandwagon. When that happens, when that continues to happen, the price will take care of itself and will be the output.
Sorry, what do you mean by that?
Really what I'm looking at.
What do you mean by support? What do you mean by that?
Like more users, more mainstream users, more financial. I'd like to see traditional financial advisors, for example, getting into DeFi. We've been talking about how difficult DeFi is to understand for the mainstream user. What if I could go to somebody who's a financial advisor who knows as much as Ryan and Anthony about how these intricate things work and can guide me, and I will give them my fiat money and let them put that to work in crypto. And we don't have that. I'm surprised that nobody has come up as a financial advisor to bridge the gap between the very geeky aspect of DeFi and the trillions of dollars that are sitting in bank accounts that are earning 0% or nothing percent. We're getting deflated. That's what we should be looking forward to.
Ryan, bullish predictions, best case scenario for ETH over the next year. What does it look like? What's success?
Look, I'm not going to outbull these fantastic panelists. Their predictions are my predictions.
Oh boy, you're supposed to outbull them.
But maybe. So I do want to get to 353. That's important. But
right?
Maybe I'll talk about how this could happen this cycle, because every cycle is different, right? But we have things this cycle that we didn't have in the previous cycle. And look, crypto happens in market cycles. You guys know that. Kraken listeners know that. You've all observed them if you've been here for any amount of time. Here's what we have this cycle, particularly for DeFi. So we have Reddit, who is incorporating an ERC20 token in some of their subreddits. They're going to do this with layer 2 technology, very likely. 450 million daily active users with dabbling into tokens. Almost all of them Gen Z and millennials, right? New generation, entryway through social networks, existing social networks. We have a major browser like Opera, 360 million users of the Opera browser. It now has a DeFi wallet inside of it, a crypto wallet generally, but also a DeFi wallet, another onboarding. Also, exchanges like Kraken, for instance. I'm not sure how many users Kraken has. I'm not sure if you guys divulged that. Coinbase has many millions. They've divulged that. What we're starting to see is exchanges start to incorporate DeFi protocols. Okay. So the original DeFi protocol that they incorporated way back to what we were discussing was Bitcoin. Then they added Ether. Now they're going to start incorporating base layer Ethereum protocols like a stablecoin like DAI. Recently, a major exchange just launched an interest-bearing DAI account, probably going to use smart contracts for that. I made a prediction earlier this year that at some point in this year, we will see a major exchange release basically a compound type protocol where users who are using the exchange can just deposit their funds into compound or into the DAI savings rate, for instance, or into Aave and start returning yield. Because these things are the base layer of finance. And I think that's going to onboard another group. So we simply didn't have these onboarding channels in the previous cycle that we have now. And I think those kinds of things are what makes the predictions these fine gentlemen were talking about become possible.
Yeah, I think that's interesting. Of course, the big thing there, I think, for exchanges is security. And I think that's, potentially we'll see some developments there. And if there's a barrier that I can see, it's the big thing is that in exchanges, you're still, people look to you as a, secured custodian of funds.
I agree. And one thing an exchanges I think can do with that is something DeFi is that's emerging on DeFi, but hasn't quite met maturation is insurance, right? So if I deposit my funds into Compound and there's a smart contract hack, I lose it all. Well, there's some decentralized insurance protocols that are emerging. Maybe exchanges can play a role in that as well to give users the curated, comfort. I'm not sure how it'll emerge, but it's exciting.
Interesting. Final question. We'll do one from the Q&A. I think we've seen a few questions, talking about how this market is developing. How do you become an insider? You guys have talked about the value of being in the know in this. Final tips, final advice. How do you really get involved if you want to just dive in the deep end?
You should subscribe to all of these three gentlemen's content. That's how you get in the know. The Daily Gway from Anthony Sassano, Bankless from Ryan, and On Coins with William Mougayar. Knowledge is power. Sorry for the shell, but these guys create great content.
Thanks, Andrew. Actually, I have a vertical one called On DeFi. So on Coins is about the whole blockchain market, but ondefi.org will keep you up to date on the market.
Yeah, I would basically repeat that as well. Really great content from Ryan and William, and Andrew does some work as well. I mean, through Consensus as well. Consensus is a great starting point for a lot of people. Particularly, I guess, like Ryan's Bankless movement is really focused on onboarding these new people into DeFi. So if you are new, Bankless is probably the best. Yeah. I mean, if I'm just thinking out loud, probably the best resource you could kind of read to stay up to date with everything going on with DeFi and to learn as well. So he doesn't just report the news, he'll teach you how to use it. So I read it every single day. Well, every time he sends it out, and it's just crazy. He's even got like a noob guide that he put together called the Bankless Guide that is just like so much information that, if I had that when I first started, it would have been amazing. It's taken me years to get to this point. And Ryan's put it into like a nice, little pack for you to learn, as much as you want, as fast as you can.
Well, there you go. That's progress. All right, guys, I'd like to thank you for joining and appreciate all our participants. Obviously, if you guys want to revisit anything from this webinar, it'll be on YouTube and Facebook with Kraken, Facebook and YouTube, and of course on Twitter as well at KrakenFX. So yeah, thanks to everybody for joining, and we'll see. The future, as always, in crypto is exciting as ever.
Thanks, Pete.
Thanks, Pete.
Happy birthday, guys. Ethereum.
Yes, happy birthday.